Welcome back to Totally Pointless, everyone. Feels like just yesterday we were diving into the world of taxes.
Yeah. Time flies when you're having fun. Or, I guess when you're trying to make sense of your tax return.
Right. And here we are again. Brand new year. And yep, 2025 brings a whole bunch of new tax measures for Canadians.
That's the one thing you can always count on, I guess. The tax landscape never really sits still for long, does it?
Definitely not. And this year it seems like everyone's feeling the impact.
Yeah, entrepreneurs, investors, really, anyone with a paycheck, right?
Exactly. We've been getting tons of questions from our listeners, especially with all this talk about a status quo year.
Yeah, I've heard that too. Status quo? That can be a little misleading, don't you think?
Yeah, how so?
Well, one expert we were looking at actually used that exact phrase, status quo, to describe 2025. He was pointing to the government's spending and borrowing, saying those are the big reasons we're unlikely to see any major tax changes.
But you're saying status quo doesn't necessarily mean no changes at all.
Exactly. I mean, there are definitely some noteworthy adjustments coming down the pipeline. Status quo might just mean no huge overhaul this time around.
Okay, that makes sense. So let's get into it then. What are some of these key changes Canadians need to be aware of in 2025?
Well, let's kick things off with something that sounds pretty good on the surface. The GST HST holiday ran for a couple of months there, December 14th to February 15th.
Oh yeah, the holiday. A break on essential goods and food items, right? Sounds like a nice little relief.
Sure, on the surface, but when you dig a little deeper, it raises some questions. I mean, how effective can a short-term break like that really be? And what about the cost?
That's true. Someone even called it a 2-month sugar high. Kind of implies that the benefit might not stick around for long.
Yeah, exactly. I mean, any relief is temporary, right?
Yeah.
And this holiday comes with a hefty price tag, potentially $1.46 billion for the feds and another $1.26 billion for provinces using the harmonized sales tax.
Wow, that's a lot. And there was even talk about the feds taking on those provincial costs, wasn't there?
Yeah, which would, of course, make their share even bigger. So it makes you wonder, right? Is this short-term break really going to provide any lasting relief? Or will we just see a blip in prices before things go right back to where they were?
Definitely something to think about. Okay, let's switch gears a bit. Let's talk about a change that could have a bigger impact, especially for investors out there.
You're talking about the capital gains inclusion rate, right? It went up.
Yep, that's the one.
Well, this one's a little more complex, but essentially it means more of your profits from selling certain assets will be taxed. We're talking things like real estate or stocks. The inclusion rate jumped from 50% to 66% for gains over $250,000.
So if I'm following you, let's say I buy a house for, say, $500,000 and sell it later for $750,000. That $250,000 profit, that's my capital gain. Before, I'd only be taxed on half of that, but now it's up to two-thirds.
Exactly. And this isn't just for individuals either. It hits corporations and trusts too. So yeah, this one has the potential to impact a lot of different investors.
And to make things even more interesting, this change is being enforced by the CRA, even though it hasn't officially been passed in Parliament. Like, what's going on there?
Yeah, there have been some delays with passing the legislation, but the CRA is moving forward with enforcing it anyway. Definitely creates some confusion, especially for people trying to figure out exactly what they owe.
You're telling me.
Yeah.
It's complicated enough as it is. And then on top of all that, we have the new Canadian Entrepreneurs Incentive to throw into the mix. This one lowers the inclusion rate to 1/3, but only for certain business owners, and up to $2 million in gains.
It's a bit of a break for some, sure, but it also just makes things even more complicated, right? It's like they're trying to make it harder for us to understand.
Agreed. And as if that wasn't enough, we also have those CPP contribution adjustments, and of course the big one everyone's talking about, the carbon tax.
Right, those are the big hitters for sure.
So CPP first. We're in the second year of those enhanced contribution requirements, and it's all about these two ceilings for calculating maximum contributions, right?
Yep, that's the gist of it.
Two ceilings, huh? I have a feeling this is where some of our listeners might start to get a little lost.
It is a bit of a mouthful, but let me try to break it down. So the first ceiling, that's set at $71,300 for 2025. So if your income's less than that, you contribute a percentage of your earnings up to that ceiling. But if you earn more than that, you hit the second ceiling. That one's set at $81,200 for 2025.
Okay, so basically you contribute different amounts depending on how much you earn, but it all goes towards building that retirement safety net, right?
Exactly. The whole point of the enhanced CPP is to give Canadians a bit more security when it comes to retirement income.
Makes sense. But of course, that also means we're paying more now.
Yep. Gotta pay to play, as they say. And speaking of paying more, let's tackle the carbon tax. As of April 1st, it's up to $95 per ton in provinces under the federal backstop.
Right? And just to remind everyone, that backstop applies to provinces that haven't set up their own carbon pricing systems that meet the federal standards.
Exactly. So we're talking places like Ontario, Alberta, Saskatchewan, Manitoba, places like Quebec, BC, Northwest Territories. They've already got their own systems that either meet or exceed those federal benchmarks.
Got it. So back to this price increase.
Yeah.
What does that mean in real terms for people living in those backstop provinces?
Well, the most obvious impact is going to be at the gas pump. That fuel charge is going up to 20 cents a liter for gas, up from 17 cents last year. And propane's going up to 14 cents a liter from 12 cents.
Yeah, that's a noticeable jump. And it's going to hit a lot of people hard, especially those who depend on their cars, for work or just getting around.
Absolutely. And while there is a rebate program tied to the carbon tax, there's been a lot of criticism saying it doesn't really make up for the extra costs, especially for Canadians with higher incomes since they tend to use more energy.
So even though the government says most households get more back in rebates than they shell out in carbon tax, a lot of Canadians are still feeling it, right?
For sure. It definitely raises questions about whether the carbon tax is really fair and effective, as a policy.
Yeah, we'll definitely be digging into those questions a little later. But for now, let's touch on some other tax changes coming up in 2025. What about income tax brackets?
Well, there are adjustments. All the federal income tax bracket thresholds are going up by 2.7%. It's a smaller adjustment than we've seen in past years, probably because inflation's more under control now, back in that target range of 1% to 3%.
Just a little breathing room for taxpayers there, maybe. What about EI premiums?
Well, the maximum earnings you can insure under EI, that's going up to $65,700. So that means the maximum annual EI contribution for workers is also going up to $1,077.48 to be exact.
Okay, last one. Any news on the TFSA contribution limit?
Nope, that one's staying put at $7,000 for 2025.
All right, so we've covered a lot here. The GST, HST holiday, those changes to capital gains, the enhanced CPP contributions, and of course the ever-present carbon tax. Definitely a lot for Canadians to wrap their heads around.
Yeah, no kidding. I think this year it's extra important for people to stay informed, really understand how these changes might impact their own personal finances. It's kind of funny, when you look at how these tax changes, they all seem separate at first, but then you realize they're all kind of connected, like pieces of a puzzle.
Yeah, I see what you mean. Like, what's an example of that?
Well, think about that increase in the capital gains inclusion rate. On its own, it's not great news for investors, but then you bring in the Canadian entrepreneurs incentive, and suddenly there's a bit of a silver lining.
Okay, I'm not sure I follow that.
Yeah.
How does that incentive fit into all of this?
Remember that incentive, it drops the inclusion rate way down to 1/3 for certain business owners, up to $2 million in gains. So for some people, it could really take the sting out of that overall rate hike.
So it's kind of like a balancing act.
Yeah.
Designed to encourage people to start businesses and be more innovative.
Exactly. And I think it points to a bigger trend we're seeing this year, this idea of using targeted relief measures to help specific parts of the economy.
Yeah, that makes sense, especially with everything going on right now. Inflation's still a thing, so the government needs to be careful about how they use taxes to encourage growth without, making things worse.
It's a tough balancing act for sure. And speaking of tough situations, let's talk about the elephant in the room, the carbon tax.
All right, let's do it. We already mentioned the price increase to $95 per ton and how that affects fuel costs, but there's a lot more to unpack here, right?
Oh, absolutely. It's important for everyone to really understand what this tax is all about, why it's there and what it could mean, good and bad.
Because I know the government says it's essential for fighting climate change. But a lot of people, they see it as just another burden, especially for those in rural areas or people who depend on their cars.
Yeah, there's definitely a gap there between how people see it and what the data actually shows. I mean, on the one hand, the numbers say most households get more back in rebates than they pay in carbon tax. But then on the other hand, you have people who are feeling the pinch, paying more at the pump, even for other goods and services.
It's complicated, no easy answers. And it brings up those big questions about how we create environmental policies that actually work, but also treat everyone fairly.
Exactly. How do you find that sweet spot where you encourage change, but also make sure that people who can least afford it aren't the ones carrying the weight?
Yeah, that's a conversation we need to keep having, for sure. Speaking of conversations, we've been relying on some great sources for this deep dive.
Totally. One article that really stood out, it's from CBC News. It's called New Year, New tax measures, what to expect in 2025. It gives a really good rundown of all the changes we've been talking about.
Super helpful for anyone who wants to, dive a little deeper. We'll definitely put a link to that in the show notes.
Definitely. And for those who are interested in the nitty-gritty, like how these changes might affect the economy overall, there's a report from the Parliamentary Budget Officer.
Oh yeah, that report's packed with insights, looking at how these tax changes could affect government revenue and spending in the coming years.
Gotta love that data, right?
Yeah.
Especially when it comes to taxes. The more you know, the better decisions you can make.
Absolutely. Okay, let's shift gears a bit. Big picture time. What are some of the challenges and opportunities you see on the horizon for, the future of taxes in Canada?
One thing that always comes up, it's that debate about tax fairness. How do you spread the burden so that it's equitable but also effective? It's an ongoing conversation.
Right. Finding that balance is key. We need a system that's fair to everyone, but also brings in enough money to fund, essential services and programs.
Exactly. And as things change, the economy shifts, new technology pops up, the tax system needs to keep up. That's where the challenges and opportunities come in.
What kind of opportunities?
Well, for one, technology. There's a huge opportunity to use tech to make filing taxes simpler, more user-friendly. We're already seeing some of that with online platforms and apps, but we can always do better, right?
Yeah, anything that makes tax season less painful, I'm all for it.
Me too. And then there's the whole idea of using taxes to encourage innovation and entrepreneurship. We've seen a bit of that with the Canadian Entrepreneurs Incentive, but there's room to do more, to really support businesses and help the economy grow.
Totally. Investing in innovation and entrepreneurship, that's crucial for Canada, especially if we want to stay competitive.
For sure. It's something policymakers need to keep top of mind as they shape the tax landscape, going forward.
Okay, before we wrap up this part, let's bring it back to our listeners. What are some of the key takeaways, the things they should really keep in mind as they navigate all these 2025 tax changes?
Number one, stay informed. It's simple, but it's crucial. These changes, they affect everyone in some way. So take the time to understand them, figure out how they impact you.
And don't be shy about getting professional advice if you need it. A financial advisor can really help you figure out what's best for your situation.
Totally agree. And remember, when it comes to taxes, knowledge is power. The more you understand, the better decisions you can make for yourself and your family.
Okay, so we've gone through all the details, but what does it all really mean for, the average Canadian?
Well, I think one thing's for sure. This year, taxes are going to take a little more effort. It's not just about filing. It's about understanding how these changes might affect your financial decisions all year round.
So it's about being proactive, really thinking ahead.
Exactly. And that's where having good resources and maybe even some expert advice can really make a difference.
Totally. So where should people start?
Well, the CRA website, it's a good place to get the nitty-gritty on all these changes. They've got info on the GST/HST holiday, the capital gains stuff, the enhanced CPP contributions, and of course, everything about the carbon tax and those rebates.
Yeah, spending some time on their website is probably a good idea for anyone who wants to be in the know.
Definitely. And hey, if you need some personalized advice, don't be afraid to talk to a financial advisor. They can help you figure out what makes sense for your situation, help you make those smart decisions based on your goals.
Makes sense. Now, before we wrap up, I want to go back to something we talked about earlier, those unintended consequences of all these tax changes. Like, what are some of the things that could happen down the road that maybe we haven't even thought of yet?
That's a good question. One thing that comes to mind is, well, with the tax code getting more complex, especially with things like the Canadian Entrepreneurs Incentive, you might see more people trying to, find ways around paying taxes.
Oh, you mean like tax avoidance schemes and stuff?
Yeah, exactly. The more complicated the rules get, the more tempting it is for some people to, look for loopholes or get creative with their tax planning to pay less.
It's like that never-ending game, right?
Yeah.
Taxpayers versus the taxman.
Yep, that's the one. And as the rules change, the policymakers, they got to be aware of these potential side effects, make sure the system stays fair and effective for everyone, even as things evolve.
Right. And speaking of fairness, it's important to remember that these changes, they won't affect everyone the same way, right?
Oh, absolutely. Like those lower income households, they might get more of a benefit from that GST/HST holiday, but those higher earners, they'll probably feel that capital gains rate hike a lot more.
Yeah, that's true. So it's all about making sure the tax system doesn't end up widening the gap between the haves and have-nots.
Exactly. Got to make sure things stay balanced.
Okay, so as we wrap up our deep dive into the 2025 Canadian tax changes, What are the big takeaways for our listeners? What should they remember?
Well, first and foremost, stay informed, take the time to understand the changes, use the resources that are out there, and don't be afraid to ask for help if you need it.
Right? Knowledge is power, especially when it comes to your money.
Couldn't agree more. And hey, remember, this is just a snapshot of what's happening with taxes this year. Things are constantly changing in the world of personal finance, so stay curious, keep learning.
Absolutely. We'll be here all year, keeping you updated on all things tax related.
And in the meantime, let's keep the conversation going. Tell us what you think. What are you most worried about with these changes? What strategies are you using? Share your thoughts in the comments or find us on social media.
We love hearing from you. And hey, if you found this deep dive helpful, don't forget to like and subscribe to our channel for more insightful content.
Thanks for tuning in, everyone.
Until next time, stay curious and keep on learning.